Now, Kenya's economy is expected to expand by 5.3% in 2026, backed by stronger domestic demand, improving liquidity conditions, and a more stable macroeconomic environment. According to Diamond Trust Bank's economic outlook, the country is entering the year with renewed momentum despite persistent risks. As Jimmy Mbogoh now reports, the lender further projects improvement in credit conditions in the country on the back of targeted public spending, which is expected to shift from debt servicing to project execution, a rebalancing that experts believe will support business confidence and household consumption.
DTB economic analysts are pointing to a more stable macroeconomic landscape in 2026, characterized by declining inflation rate and a stronger external position as an important foundation for the projected 5.3% GDP growth, pegging the growth on public spending, which they say is expected to play a critical role. They believe this will shift focus to project execution, particularly in infrastructure and social sectors.
So overall, we're very positive about the outlook for Kenya and the region for 2026, driven primarily by, of course, government spending. And of course, this will be disproportionate with more spending in Uganda and Tanzania compared to Kenya, given our fiscal space. But also, this could be compensated, especially for Kenya, by strong monetary policy intervention.
They, however, warn that risks to the economy remain substantial, particularly climate shocks, including drought and floods, which continue to pose a threat to agriculture and food security sectors that underpin both rural incomes and inflation dynamics. Fiscal constraints have also been cited as a major risk that could see the government push for more domestic borrowing, crowding out the private sector at a time when the sector's demand for capital is picking up.
We're expecting at least just a rebound in demand, and we're seeing supportive policy not only from governments but also central banks to just jumpstart and support demand across businesses and also consumers. What's also encouraging is labor markets are beginning to pick up. Of course, with growth, recovery in businesses, they need more people to work. So
slower global growth, geopolitical tension, and tighter international financial conditions could also weigh on exports and capital inflows, but they remain optimistic that stability will persist, at least for the first half of the year. Jimmy Mbogoh, Citizen TV, Nairobi.